The Fibonacci retracement tool uses the mathematical link found in the Fibonacci sequence to plot percentage retracement lines. The support and resistance levels provided by these retracement levels might be used to set price goals. In today's video, we will learn about the Fibonacci retracement. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, Forex, and many more. So watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So let's begin the video. First, a trend line between two extreme points is drawn to show the Fibonacci retracements. The trend line is crossed by a set of 6 horizontal lines that are drawn at the Fibonacci levels of 0%, 23.6%, 38.2%, 50%, 61.8%, and 100%. How this indicator works. Possible areas of support or resistance are indicated by the percentage retracements, which are 23.6%, 38.2%, 50%, 61.8%, and 100%. A set of price objectives is produced by applying these percentages to the difference between the peak and low price for the chosen period. Prices frequently retrace a sizable percentage of the prior trend before continuing to move in the original direction, depending on whether the market is moving up or down. The Fibonacci retracement levels are frequently the parameters that these counter-trend swings fit into. Calculation. The Fibonacci sequence of numbers includes the following numbers: 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, and so on. Each succeeding number is the sum of the two numbers that came before it. Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.